Morning, guys. Keith at Crypto Bullseye. This one's going to be an update on Floki because Floki has run. We got the break, we got the close, we got the retest, we got the bounce, and we managed to get the best possible entry possible on Floki. That was on the back of the meme coin video. Go back and watch that a couple of days ago because Bonk had run, Pengu had run, and we were waiting for Floki to run. Why? Because it was trading in exactly the same pattern that hadn't broken out. So we got the break, we got the retest. I said this was going to be the ideal position. Look where we bounced, look where the entry was, exactly at 0.00007415. So absolutely smashed that entry, perfect on that entry. What does this allow for, and how can we actually play this move going forward? Because this one, guys, is going to be a follow-on from the previous video to show you risk management techniques that will allow you to bank and ensure that you bank your crypto profits along the way until the trend ends. What do I mean by that? The first thing that we need to do, we need to preserve our capital. Let's do this now. So preservation of capital is the key. There's your stop loss below that previous low. You can see that we've had an RS flip. We bounced from this. That was resistance. That acted as support. And then we put in a new high. So we've put in a higher high. We put in a higher low. What does that mean? Something's changing. Had a trend break. What does that mean? Something's changing. The bulls have got momentum. Let's bring up the indicators. Bulls have got momentum. You can see we've had this push. This push has put us all the way up to overbought. This means that we could potentially pull back here. It's not going to go in a straight line, potentially pull back here. And what do? Structure, RS flip, exactly the same as this. So you're waiting for a pullback. Anyone that hasn't got into this, you're waiting for a pullback and you're waiting to hold this structure level here, ensuring that you understand there's a higher probability that you're going to put in a new higher high. So that's a trend continuation. It's looking like it's going to be a trend continuation, but how can you protect yourself if you're wrong, if this moves completely wrong? Because that is the aim of the game, guys. Little risk management techniques go a long way. So we're expecting that to happen. We're expecting a pullback. The indicators are telling us we need to pull back. If we pull back, we ensure we maintain that higher low structure, then that is a good second entry. The people that did get the original entry, how do you play it? First thing you need to do, diminish your risk. What do I mean by that? So you've got a stop loss. That was below this previous low here. You've got your stop loss. Get your stop loss, stick that straight to break even. What does that do? That means that you've got no risk on this trade whatsoever. What you've got on this trade is from there, the break, from the retest, a 23% move to the upside. So worst case scenario, you've took away your risk, you've got rid of your stop loss, you've increased it to break even. Worst case scenario, this thing comes back down, you get stopped out at break even. What do you lose? You lose the unrealized P&L gains of 24%. So how can you protect those gains? How can you protect those gains? This is the daily chart, and what I want to do is zoom into the 4-hour, because what we're going to talk about is trailing stop losses. What is a trailing stop loss? It's when you keep putting your position up and you keep putting your position up, riding and riding the trend all the way to the end, all the way to the bend at the end. And when that gets reversed, you're reversed out. And guess what, guys? You're in profit. What do I mean by that? Let's do it. So we've diminished our risk. We can understand one thing. Look at the chart, guys. What's happening? You're putting in higher highs and you're putting in higher lows. We've got a clear bias. We're bullish. There's the high. Come back down. You've retested this previous resistance as support. Come back up. Guess what? Come back down. What you're doing? Retesting this previous resistance as support. And then we're coming back up. New high. What do we expect to do? Come back down. Test this previous area as resistance. So we're expecting to ride the trend up. We're in this shorter time frame. And how can you protect these gains along the way? Easy, like this, guys. So you're bringing it up below the previous swing low. Because once the trend reverses, what happens? Once the trend reverses, you take out the previous swing low, come up, put in a lower high, then continue down. Hasn't happened yet. You've got to respect the trend. So we're respecting the trend. We're protecting our gains along the way. So the stop loss, the original stop loss was down here. We've got rid of that. Now we're increasing our profit margin. So we're increasing our profit margin. And as this keeps riding up, we're keeping rinse and repeat. There's the previous one, RS flip, rinse and repeat. What would you do now, guys? You tell me, what would you do now? You'd bring it up below the previous low and see how you're banking this and banking this. This was your previous entry down here. This was your previous stop loss down here. But as you're riding the trend up and you keep putting it below the previous higher low, then that gives you an edge, because what happens? What happens if we fall short, and we fall short just short of this target here? All of that work would have been for nothing, and it falls short here. What would happen? Bam. you get stopped out, you get stopped out in profit. Not as much as here, but you're stopped out in profit. The difference was between here and here. So it's about halfway there. It's not to be sniffed at, guys. Use these risk management tools to your advantage and make sure that you are banking profits along the way. Because ultimately, if you took the trade and if your stop loss was down here, and if you weren't managing the trade, and if your target was up here, and it went all the way up, didn't quite reach that, and then come all the way down, you didn't do anything. And then it's not only taking your entry out, it's taking your stop loss out, it's diminished your capital. And that's the thing that we're trying to avoid, diminish our capital. So that's how I would play the Floki trade, guys. Let me know if you did find that useful, because it's nice to actually do a bit of a follow on after we're starting to put swings and after we're starting to get momentum in the crypto market. And you can see that we are getting some real momentum in the crypto market on the day to day, on the week. Things are looking bullish, guys. So let me know in the comments what you want me to cover next. Tell me if you found this useful. Get yourself in the Discord group. This is absolutely booming at the moment, guys. So get yourself in the Discord group, and I'll see you in the next one.